Hi everyone, welcome to this live coverage of a Fed meeting. I'm here with Mauricio Carrillo from FX Street, and shortly Yohay, Elam from Forex Crunch will be joining us. As you can see, the dollar has taken a nice dip ahead of the news, but anyway, we are here waiting for whatever Ms. Shelen has to say to us in a few minutes, okay? Hi Mauricio, how are you?
Hi, Valeria, how are you?
Fine, waiting for the news.
Yeah,
And for you,
um,
hi?
yeah, waiting for you. Hey, again too.
Anyway,
So it was a very good move lately, no?
yeah, we have a strong move against the greenback. I honestly don't see much behind the movement, right? There was no catalyst for this move except maybe the market is extremely anxious ahead of what the Fed may or may not say. I have been reading news lately, and what I have seen is that most of the market believes, most of the market players believe that the Fed will remove the word patient today. So, and we'll take that as a sign that we will have a rate hike, I don't know, next month, maybe June, this summer for most, okay? But still, it's an expectation of the market and nothing that the Fed or Fed officials had said lately anticipates that they are actually going to remove the word patient for the statement today. And even so, if they leave the word patient by the, I don't know, another hawkish line, the market may see it also as a possibility of rate hike in June. So actually, this is a wait and see stance for me. I'm not joining this party against the greenback right now. Okay, but for most, what I have been following lately is that the data in the United States is not being bad, right? But it has been quite disappointing lately, missing expectation, and as a surprise, the Fed is blaming it on the winter and the bad weather. The only thing that keeps improving is the employment sector, right? We are getting huge, beautiful payroll ratings, and I think that's the base of all these expectations market is having for today's meeting. Anyway, keep in mind that what Shelen said in January, if I'm not wrong, she said a couple of meetings, not before April. She made it quite clear, and in the last month minutes, sorry, she also cleared up that they will be changing the wording to anticipate a rate hike. So I believe the market may have rushed a bit going on with the greenback and betting on a rate hike as soon as June. And maybe that's what they have just realized. But okay, anyway, as I said, it's a wait and see. I'm not going anywhere at the time being. Okay. Hi, Yohay. I see you're here. How are you? Can you hear me? Okay, seems Yohay can't hear me.
Yeah, it should be here.
I see him joining in the room, but I can hear you. Okay, anyway, so far, it's 9 minutes to go until the announcement of the interest rate and the release of the statement, okay, and of the economic projections also. And
I'm
30
great,
minutes.
I'm great. Good to be here.
Hi, how are you? I thought I didn't have you in here. I didn't hear you. How are you?
I'm good, I'm good. Can you hear me?
Yeah, now I can hear you fine. Welcome.
Thanks. Great to be here.
Okay. I was saying that we have the announcement of rates and the projections of the Fed in a few minutes, but the speech won't start until 30 minutes later, right? Anyway, I believe that the market will focus on the statement, right? And they will run to read whatever the statement says. What's your take? I'm not sure if Yohay can hear me fine.
I missed your last sentence, sorry.
Okay, I was asking what's your take on what the Fed may say today?
I think they'll remove the wording patience, as everybody expects. I think Janet Yellen prepared us for that in her last statement, and the good non-farm payrolls also cemented this. And I think, on the other hand, they will try to show that they're not in any rush to raise the rates, and everything is data dependent. So they'll change the word patience for some kind of description that they're actually patient, but without using that word.
Okay.
So,
Mixed signals.
yeah, they always want to keep their options open and to keep everybody confused just a bit.
Yeah.
So,
They will retire. They will take off the word of passion, but will act like to be passion.
Yeah, that's more or less what we are thinking. Anyway, what do you think of this bearish rally against the greenback, the bearish run of the dollar right ahead of the news?
I think it's sort of a setback correction to all the dollar strength we've seen for so long in the US dollar towards this decision, towards the removal of forward guidance from the Fed. So now, towards the event itself, we're seeing some kind of correction, weakness of the dollar. But as we speak, I see euro dollar, for instance, backing down from that high level of resistance.
Yeah.
So I think markets are a bit nervous, to say the least.
Yeah, I have to say that no matter what happened today with the Fed, the imbalance between the European Central Bank and the dollar, the U.S. Federal Reserve will remain the same, meaning the Fed may not raise rates in June, but maybe in July, or August. And in the meantime, the ECB is just starting with quantitative easing. So I believe that the bearish trend will prevail no matter what. Maybe we have a huge spike higher, which I'm not expecting the pair, but I'm pretty sure that sellers will take their chances at higher levels once the dust settles.
Yeah, I believe the trend in the dollar remains strong. Even if the Fed takes its time and raises the rates only in September, the next meeting that has a press conference after June, I don't think they'll do it without a press conference. The trend remains intact until, as long as expectations are there for a rate hike this year. I think that after the Fed actually raises the rates, about a month later, we could see the dollar a bit change course, but it's still far off into the future.
After the market hits. Oh.
Yeah.
Well, I do believe that Chilean says that, she can't even raise rates without in a meeting that has no statement, But I'm not sure when she said that. I
Yeah,
believe
she
she
said
did.
that a few times, but
Yeah.
I just don't believe her on that. She said that every meeting is a live meeting and they can raise the rates also without a press conference. But I think it's such a big move of historic proportions after so many years that she will want to explain it in a press conference.
Yeah, I do believe the same, but anyway, so as everyone in here knows what we are talking about. As you said, they try to keep the market a bit confused.
Yeah.
Okay, and what do you believe about pound? What do you see there? I have seen
I,
the pound being hit hard by
I think
Bank of England lately.
Yeah, I think the pound is getting a bit nervous towards the elections in the UK on May 7th. And today we had the budget, and also we had figures showing less wage growth, and this is something that the opposition Labour Party is playing on. There's lots of uncertainties, so the pound got another blow. I think the UK economy in general is doing okay, and the Bank of England will also raise the rates after the Fed probably. But in any case, I think it's fundamentally oversold the pound. So I see it.
Yeah, you know it's our soul. We are not going to take uh, a test of 45. I can see a test of 45.
Yeah.
Coming
Uh,
days.
it lost support and it's now trading at very low levels. So technically, yeah, I agree, but
The chance,
just
right?
went too far.
Okay, we are a couple of minutes away of the first bunch of data. So let's see what the Fed has to offer us. I didn't see the strong bounce in Japanese yen. Eric, again, you want to talk about
So we are 2 minutes to go.
that? Let's go.
Yep. Anyway, we're seeing many currencies strengthen against the US dollar, including dollar yen, went back to the 120 level, handle just under 121.
The euro is pretty wild.
Yeah.
It has been up, down, and Canadian dollar is pretty strong despite oil remains under pressure. Stock price grow in the States. There's not much more.
Stocks. Sorry. Again.
No, it's okay. Tell me.
Well, it was, stocks are falling. Well, look at that.
Yeah, look at Canadian dollar.
The Canadian and the Australian dollar
Yeah.
and the stocks.
Canadian dollar tested new highs today. But,
For the week.
I mean, sorry.
Yeah, tell me.
Dollar CAD reached new highs, 128.33 today on weak wholesale sales in Canada, and also the continuation of the fall in oil prices. But now towards the Fed decision, the Canadian dollar is strengthening against the greenback like everybody else. Anyway, we're seconds away, no?
Yeah, seconds away.
30 minutes. 30 seconds.
30 seconds.
The Canadian dollar is actually testing the 200 hours moving average.
Extremely nervous market. Guys, keep your hands in your pockets for a while. Market is really crazy so far. Oh, sorry. There we are.
Let's see what the Fed does.
Or says.
Oh, it's time.
Yeah, don't change it.
Okay. Oh, pretty wide moves across the board.
It dropped patience.
They dropped patience?
Yeah, Fed drops patience in FOMC statement.
Nice.
That's the headlines I see. But the reactions are not exactly as expected. Maybe it's a buy the rumor, sell the fact.
Yeah.
Dollar is weaker.
The euro is about to test 700.
Look at the euro.
It broke above the former resistance, the previous week high.
Wow.
Stocks are strongly higher in the same as commodities. 730 for the euro dollar accounting. We may continue in here up to this former low 780 is the next major resistance level there.
Euro dollar is above 107. Reached 107.32, but it's moving a bit in a crazy manner.
Okay, I'm seeing that the Fed wants to be reasonably confident on inflation before lifting off rates. So, and with inflation at the current levels, I don't believe they are reasonably confident.
Yeah, so
Fed says rate rise remains unlikely in the next April meeting.
Yeah, unlikely to rise rates in April.
Everyone.
Well, we have the projections too.
They will discuss about it in June, as mostly what the market was knowing before, but market reaction is pretty outside what we were expecting. Maybe the June action was already priced in, and we are seeing now that the market is taking profits out of the table.
Yeah, we're seeing a strong reaction.
Yeah.
Because, well, as we said, they removed patience, but they softened the statement with other words, committing not to act in April.
Yeah. They have not decided yet on the timing of the initial increase.
Yeah, I think they want to remain flexible. They don't want to tie themselves too much.
Dow Jones Industrial Average is about to retest the 18 level. It has broke below it and has been unable to regain it. And all of a sudden, it added a couple of hundred points with the news. It's approaching the 18 level, 1800.
I expect inflation to rise to the target of 2% in the short term, in the middle term. But they need to be really confident about that before rising rates.
Yeah.
So
I think they're still bullish on the economy, though. Labor market conditions have improved further with strong job gains and a lower unemployment rate. But yeah, instead of patience, they want confidence on inflation.
yeah,
So
actually stocks are turning higher.
Yeah,
They are posting gains on the day. Also the oil,
also commodities. Yeah, I was saying that.
the oil and the gold are trying higher.
Canadian dollar has already erased all the initial gains and is reversing course. Japanese yen is about to, and the euro is back below the 700 figure.
yeah, I think the markets are digesting. Yeah, often we have big movements initially, and the full reaction is only in the morning after, European morning after.
Yeah. Okay, dollar is about to turn positive also. As euro, C, and pound is struggling there. Wild moves.
Yeah. So I think last time we covered the Fed, it was a bit boring. We can't say this this time.
Yeah, I agree totally. Swiss
So
franc
let's
is
see. So
rated. Sorry, tell me.
I'm sorry. The euro jumped to 1 point, yeah, oh
Seven.
730, but right now it's back again below 0.07. What is your touch? What the trader has to see right now to confirm to confirm
I believe that if the price breaks above this high after that settles, we can go up to 780, right? This price zone. But as I said, I do believe that the bearish trend will prevail. Here will likely resume the downside in a couple of days, maybe in a couple of sessions. And if somehow, which seems unlikely now, the price moves back below 620, 30 or so, chances are back towards the downside and this movement will be pretty reverted. That's my take.
I see.
Okay, many were looking to see what they say about the dollar, strength of the dollar. So what I see so far is that export growth has weakened, and of course that's a result of a stronger dollar. But I don't see them as too worried about growth in exports and about the strong dollar. I mean, just noting it, but not extremely worried. So we have euro dollar.
Okay, there we are starting again. Gold is pretty interesting. Jumped nearly $20.
Yeah, I think also yields are moving. Regarding the forecasts, the Fed also publishes this time its updated forecasts. GDP is expected to be between 2.3 and 2.7. That's lower than 2.6 to 3% that they said in December. These figures are projections for 2015. But the unemployment rate is also carrying lower expectations. Instead of 5.2 to 5.3, it's now 5 to 5.2. But also inflation is lower. Core PCE inflation is down from a range of 1.5 to
Sorry, what did you say? I lost you.
I just talked about the updated forecasts.
Yes?
I think their GDP is lower, unemployment is lower, and inflation is lower. I think everything was expected and goes well with what happens in markets. Inflation is lower because of oil, unemployment rate is falling faster than expected, and growth seems to be a bit slower if we look at recent expectations. So I don't think we have any surprises here.
Yeah.
I think, I don't know why, but there is like a smell of bearish, the dove, the smell of those. The Fed is not as hawkish as it was in the previous. I don't know.
Yeah.
This franc has been pretty strong today, regardless the Federal Reserve. After practically feeling a huge glide post yesterday, I do believe we will heard something about the central bank. So that tomorrow.
Valeria, there is somebody asking about the gold.
About gold, yeah. Okay, are they asking something particular about the outlook of gold?
Yeah,
Honestly, I don't.
they're saying
Uh,
like sell
we're seeing,
gold.
yeah, what we are seeing right now is mostly an upward corrective movement. I think that the bearish trend is quite strong in here, but as we hover around production cost, sorry, the commodity will tend to fall to the downside. Nevertheless, I can see that if we take the recent high, we can go up to 75, 1175. But honestly, I'm not a big fan of buying gold, sorry, at this point. I'd rather sell at higher levels, you know, rather wait where the dust settles and attempt selling because the bearish trend is pretty much in place. Right now, we are seeing just a corrective movement in the next week. There's no demand niche, and there's no big risk that uh, forces investors to go to seek for safe haven assets. So I don't see much of an upward potential there.
We're now seeing a fresh surge in the in euro dollar, a fresh sell-off of the US dollar. And well, of course, the dollar bears can find things to lean on here. International developments need to be taken into account. The economy is moderated somewhat. I think they are acknowledging the weak indicators we're seeing so far. But I think they also balance the statement with some bullish things regarding the gain in jobs and that's their mandate, jobs. So It's not that bearish, but I think the market likes the bearish stuff. And that's why we see the reactions in the US dollar, in gold, in oil, and also in US Treasury yields.
I didn't check shields. Where are they?
They're falling, as far as I see.
Okay.
Means markets expect the Fed to raise rates only later. Not so fast. To de facto be patient, even if they remove the wording. Interesting that they explicitly state that there's not going to be a rate hike in April. They usually don't refer in their statements to specific dates.
Yeah, I know.
There is somebody asking that according to the Federal Reserve and tomorrow the Swiss National Bank, what to do? What do you think about the US dollar Swiss franc?
I don't know. So far, the Swiss bank has been sort of intervening in the market without saying much about it. So I do believe that if the pair continues falling, they will probably do some buying of pair tomorrow. So to push it higher, they will attempt to push the Swiss lower. They have been doing so ever since they lift the peg. In quiet, right, by the dip. So I believe that if the currency strengthens further today with dollar weakness, we may see them acting tomorrow. The Dow Jones Industrial Average, in the meantime, is about to break above 18. the stock market is in love with the Fed.
Yeah, it's about to recover.
Yeah.
Yeah.
18,000.
So there we go.
Yeah.
Yeah, I think the markets read that after some hesitation, at least now they read it is very dovish, so it's good for stocks, bad for the dollar, good for gold, good for oil, good for bonds, bad for bond yields, and but we'll have to wait and see also the reaction to Janet Yellen's press conference, which begins in 15 minutes. I think she'll make an effort to confuse us.
Even farther, right?
Yeah.
Okay. Here is taking.
Well, last week, Janet Yellen gave candies for everyone, for everybody, for the hawkish, for the dovish, for everybody,
Okay,
Yeah.
for the treasury.
the previous high, so and it's accelerating 750 right now, probably moving towards the 780 90 price zone. That's the next big resistance in there.
Wow.
An interesting thing here that I see in the forecast. Their median estimate for the Fed fundraise at the end of 2015 is now 0.625, and beforehand it was more than 1%.
Okay.
So it means that rates will rise this year, but slower. That means that they might begin later. Sell-off in the US dollar is accelerating. So
Dow Jones is having a hard time to overcome, I think.
Oh, look at the Australian dollar is over 77.
Yes, also it's also strong, yeah.
yeah, euro dollar reached peak of 107.50.
Yeah.
I think this line played a role in the past, but we haven't seen it for Well, not that far away actually. But last week the euro fell so much that,
Yeah, it has a lot of room to correct to the upside.
yeah, because it has fallen so much.
Yeah, exactly.
See also pound dollar correcting to 148. In my opinion, that's a bit more justified. Dollar yen is still holding well above 120, but
Yeah. This franc is seeing fresh lows for the day. Well, I guess this is ramping up. And it's also and flat, so there will be a lot of time and less to fall. At least in the
so we have so far quite a drama.
yeah. And Miss Chilen will start first page in around 10 minutes, right?
Yeah, I think she'll try to keep us confused, but markets are already moving anyway, so
And here it's going the euro to fresh highs.
yeah. Yeah, we have sharp moves across the board. Actually, the moves began beforehand. I was wondering if somebody knew about it.
Yeah, I was thinking the same. I went for lunch. When I come back and I saw those sharp moves in the greenback, I said, "Oh my God, I came here late. Oh my, take a look at the pound. I was jumped like 30 pips in a second."
Yeah.
Anyway,
So
yeah,
we have a few things. We have the Fed waiting to be confident about inflation. The Fed's explicitly saying no hike in April. They say that the economy has moderated, and perhaps more importantly, from the dot chart, the median forecast Fed funds rate to reach 0.625% at the end of the year instead of 1.125. So that's 0.5% lower. 0.5% is 2 hikes. So it can be seen as a hint that they'll push the rate hike back from June to September. Maybe.
yeah. I'm shocked with pound. Sorry. Okay, the euro reached that 780 we were talking about, and it's breaking above it, so that leaves room for further upward moves. Next line in the sun is 830, but we will probably see some consolidation in here. I don't know.
Okay,
They
there
said
is
they will lose
somebody
time.
asking. There is somebody asking about the euro dollar.
Yeah,
About where is the if there is a sell or buy, but where is the levels to watch
yeah.
in the
Well,
short
we
term.
said that the rally may extend up to 780, and it just did. And if the price holds now around these levels, next big line in the sun for me sounds around 830. But I will wait until the upside get exhausted right now.
We have touching 108. Well, it wasn't that long ago. We traded above these levels in just after the non-farm payrolls, euro-dollar closed at 108.50 more or less. Since then, we had a big fall.
Yeah. Payrolls moves, right. Down was rejected for that 18 level. Still holding nearby. Yes, it's waiting for lands north and the Canadian weather continues going. No respite for that.
So far, we have a move of over 100 pips in euro-dollar.
Yeah.
It's quite a strong reaction. In general, a weaker euro is good for the eurozone, and eventually this can boost inflation and help exports and lift the euro. I think that Draghi doesn't want it to happen too soon. So I think we haven't seen the lows in euro-dollar yet, but we're certainly seeing a very strong correction.
Pullbacks are quite shallow so far. We're still below 180.
Guys, I am wondering if you can listen in my connection to the Federal Reserve.
Your connection to what?
I can. The live broadcast of Yohay?
Yeah, the live broadcast. I'm trying to put the live broadcast, but I'm not sure if you can listen.
No, I
I can't hear. Well, maybe they're not showing anything. I don't know.
Darko is asking which charts are you using. I believe that it's probably asking you, Yohay. Which charts are you using?
I'm using a website called TradingView. Yeah, TradingView. I find it's an HTML5 software. I find it very comfortable. And well, I have a username there, so it remembers my lines. But there's so many charting providers out there, so I'm used to TradingView and I'm used to NetDania.
Yeah.
Everybody has his favorites. What do you use, Valeria?
I always use MetaTraders.
MetaTrader, yeah.
But using
I like TradingView too. It's very nice, intuitive, very clean.
Which one? Sorry.
Yeah, TradingView that you are using. It's really nice. It's very intuitive. It's clean.
Yeah.
So what are our expectations for the Janet Yellen speech?
I believe that, as Yohay said, it will try to confuse us a bit more, but nothing more than what we have already heard right now. Maybe she could say something about beginning to discuss rates in June and delay it to September, something that Yohay suggests. And if that's the case, the dollar itself will likely stand sharply.
It will be interesting to see if, I mean, we can look at the economy two ways. For on one hand, and the Fed's mandates, core inflation is still relatively strong, 1.6, and jobs are moving strongly rising, but all the other indicators are weak. Industrial output, housing, retail sales, durable goods orders, everything else looks weak. Even consumer confidence is falling despite lower oil prices. It will be interesting to see how she balances between what view she takes, if it's more bullish or more bearish, and it also depends a lot on what, not only on what exactly she says, but on what analysts say that she said or she feels or things like that. Trying to understand her confusing words.
That confusing word. Very interesting. Very interesting move in the oil. It's like almost $3.
Yeah.
Almost $3 and going up.
Okay, now we're seeing euro-dollar a bit off the highs, but we're still, of course, above the pre-Fed levels. Okay, now I can see the screen of the press conference.
Yeah. What do you think has more style to get back to the room? Draghi or Janet Yellen?
I prefer Draghi. Usually it's the Draghi drama and the Yellen yawn for me. Also because of the reporters that manage to get Draghi angry from time to time, and then he says more interesting things.
Yeah.
Well, he's Italian anyway, so maybe that explains it.
I always said the same. Right, it's Italian, so it's his speeches are a bit more spicy.
I think he began a bit slow in his first 2-3 meetings, but since then he's already more than 3 years in his job, and he's keeping us busy. Okay, I see she's beginning to talk. I can't hear her.
I can't hear her either.
I think, well, in the beginning she usually just reads the statement.
Yeah, and then she has, are you going to broadcast her speech? Someone asking. We will try, but we will see if we can. Right, Mauricio?
Sorry?
If we are going to broadcast her speech.
Yeah, but we should comment her because I'm not sure we are.
We can.
Broadcasting the sound too.
Yeah, let's see if we can pick up the comments on what she says. Yeah, as we said from previous events, she begins with just reading out the statement before explaining a bit more and then answering questions.
Also is making highs. The Dow Jones is breaking above 18.
Stocks love it. Yeah.
But I mean, this is leaving little room for reversal in the dollar right now. I'm not hearing much of your speech, but I can check. Okay.
See if we can pick up some comments in the meantime via various means of communication. So, what is Yellen saying? Yeah. Okay.
Says that just because we remove the word patient doesn't mean we are going to be impatient.
Yeah, I saw that as well.
My man.
Yeah. She's sort of like a good auntie, no? Have to be patient, children, or something like that. Of course, markets always want to know everything, want to react.
Yeah, that they didn't decide on the timing of right increase. The same that we have heard so far. That's that noise. Yes, you are not presenting any longer, Mauricio. I'm not sure why. Hang out getting that message. Can you hear me, Mauricio? No. Mauricio.
Yep, sorry.
Ah, I can see Yeleng, but I can.
Yeah. I think markets are currently taking a
Yes,
break, listening to what she says before making the next move.
you have it mute, I believe.
Well, there is no resilience.
Yeah. She does say that slack in the labor market continues to diminish, which is also in the statement. Well, wage growth remains sluggish, suggesting that some cyclical weakness persists. This is bearish.
Remember.
We can also see her statement about the move in not raising rates in April as opening the door to acting in June, but the market certainly doesn't see that this way, especially in the background of everything else they said.
Canadians so wanting to take out the 800 level. So wanting.
But regarding oil prices, she does say it's transitory, and that's relatively hawkish. That's a repeat of what she said in the past. They do see through the fall in oil prices. It doesn't seem to have an impact on core inflation.
Yeah, I'm seeing headlines that says that she has just said that dollars rising means inflation will be lower for longer, and yeah, so that means like a vicious circle, right? We have a stronger greenback, then inflation will be low, then the normalized rates. So maybe
I think she's not as dovish as the statement, but only marginally. The talk about transitory oil prices, the talk about strong labor market.
yeah. I don't know. I don't know how to say that in English. In Spanish, we say salud.
Bless you.
How?
Bless you.
How?
Bless you. Bless you.
Bless you.
Right, you're right, sorry.
Yeah. Markets are making me dizzy, maybe, and
Huh.
Okay, meters are pulling back a bit, but really nothing significant at this point. Euro is 20 pips below its high. Pound retrace mode, but anyway, in advanced mode. Anyway, before the move. Still not a clear picture in here.
yeah, we're seeing euro dollar falling a bit back, 107.60. I think markets are listening to Yellen, consolidating the move, looking for the next direction. She's now explaining the meaning of removing the removal of patience and what it means. Once again, she says that, hinting about oil prices, that they don't have a considerable impact on core inflation. That's, again, bullish.
This change does not mean that an increase was necessary occur in June, although we can't rule that out. Yes, but no
Yeah.
black.
No, but yes.
Not white. Yeah. As you said, confusing.
Yeah, I think she's doing her best. Usually she succeeds. She's not the only one, of course. She didn't invent this. Here a comment on Facebook, on Twitter. Forward guidance. It was fun while it lasted.
Yeah.
And here I see another headline. Hike in April is unlikely, but don't assume that it will be in June.
Yeah.
But don't rule it out.
Yeah, everything is possible.
Everything's possible. Twilight Zone.
So the US 10-year yield is falling back under 2%. That's a reaction of the statement.
Okay.
I see a headline from CNN Money. Fed signals rate hike is coming, but not quite yet. So I think she's doing a good job of confusing reporters. So
yeah, Market Watch recently reported that the Fed was preparing the way to hike, and they say like in 3 months or something like that. But it was like 5 minutes ago.
At the end of the day, and in the long run, this is noise, guys, because we all know a rate hike will come in years before the year is over, right? Maybe it will be sooner, maybe it will be later, but rate hike is coming in years this year, right?
Yeah.
And at the same time, we know that Europe and Japan are still in the easing path, right? Europe just starting the easing path, right? And the pound, well, maybe maybe next year, maybe not. So basically, the background is the same chain. That will be the first and the only probably if we are in the tightening plan. So beyond the noise we will see today, and maybe that extends into tomorrow and even into Friday, at the end of the day, the dollar will prevail against all of them, right? Because of fundamental background differentials.
Yeah, I certainly agree. I think the Fed will be the first central bank in the developed world to, well, after New Zealand, of course, did that last year, to raise the rates. The Bank of England will come second. It can be pushed back to September instead of June, but the
This year.
US will lead the way in tightening.
Yeah, and we are talking about a probable rate cut in Australia, meaning we are waiting for it, right? If not this month,
Yeah,
maybe.
they hinted very heavily that the rate cut is coming in Australia.
Yeah. So basically, background is the same. So maybe we see this noise, but at the end of the day, at least for me, the dollar remains the king, right? And I will be waiting for selling at better levels rather than daring to buy anything agreement, you know?
Yeah. I
Anyway,
think the statement gave a chance for a dollar correction, which was probably needed, especially after last week's crazy moves.
Indeed. Who is hammering its computer? Mauricio, are you hammering your computer?
Yeah. Sorry, I was talking with Annie. You know, our beloved Annie. So what's going on? The dollar is down.
Yeah, I believe they are consolidating, and we are not going to see much more right now. Some consolidation, some spikes here and there, but we are going to see a bit more of action in the Asian session, particularly when Japan opens. I believe that if the Dow Jones closes around these levels, tonight we are going to see wild moves in Asian share markets, right? So
Yeah.
then we may see some follow through in this dollar sell-off.
Yeah, I think that when the Asian session begins, by then we'll have more analysts writing what they think about the Fed. One of the most important ones is John Hilsenrath of the Wall Street Journal.
Yeah.
And markets will have time to digest everything that happens here and pick a direction. As we said before, I think Fed is going to hike this year. There's no doubt about that. That's the big picture. And eventually, after this correction, I think the dollar will be ready for another move. And we'll see the full reaction maybe only tomorrow in the European session, but I think we're lucky to see volatile markets already now. A few of Yellen's headlines are, of course, rate hikes will depend on the data, and they didn't decide on the timing of the rise. Regarding the job market, the pace of jobs growth has been strong and it's moving towards full employment. In all the measures of employment, and the slack in the labor market continues to diminish. However, they do acknowledge the slow growth in wages and are generally optimistic about the jobs market. Well, we talked about the dollar prevailing, and now it's euro dollar is 107.35.
And dollar to mention almost erased on this line.
Yeah.
But it's
We had a
dollar.
low of
I think
123.
I think overall the notion is that the U.S. economy is not as good as it was before. The GDP, the employment, and the inflation not good enough for the
They're
Fed. So
yeah.
it's a weak dollar. So I think the dollar will make a retracement from previous highs as it's now doing right now.
But American data, as I said at the beginning, I don't know if Yohay was in here, but besides jobs, besides the employment sector, data has been a bit disappointing in the US lately. So
Right.
my think is that we need to see a bit of improvement in there to see the market taking the dollar to new highs as most of its rivals, right? But in the meantime, I do still believe the dollar will keep on ruling the market. But yeah, indeed, the data has been not as bright as we may want. And yeah. The other
And of
thing,
yeah, and of course, if the dollar continues rising, it will be worse for the American economy.
yeah,
Janet Yellen just told us that the dollar, the stronger dollar is hurting the exportation. That is obvious, and making import price cheaper. But
yeah.
it won't be easy for the United States economy to be rising at the previous pace, if the dollar continues rising. So I don't expect more strain in the dollar for the near term.
Regarding wages, he also says that higher wage growth is not a precondition for raising rates. It means they don't have to see salaries go up before raising rates, even though they are worried about that, of course. So that's slightly hawkish.
Mm.
Well, I think also about the dollar, she's taking it both ways. A strong dollar is pushing inflation down on one hand, but on the other hand, a strong dollar reflects a stronger US economy. So,
Yeah, maybe it was too fast.
yeah.
Too fast. I think they were not ready. Yeah, they were ready to have a euro dollar at 120 or dollar index at I don't know 95, but a euro dollar at 1.05 is too cheap. Well, it's too strong for the American economy.
Have she already started with the questions, or is she still speaking?
Yeah, she's answering questions.
Okay.
I think the reference to the US dollar came as a response to a question by a reporter. She says that wage growth could be a sign of inflation rising. Well,
Not sure if
it's not very surprising. Yeah, the Fed will continue monitoring inflation and employment developments carefully. Okay. All in all, and policy actions will be data dependent, as always. It's data dependent.
Same, yeah, I was about to say that.
So we're seeing euro dollar off the highs. More consolidating, stabilizing. Can't say it's really reversing. See other pairs. Cable is at 148.50. Quite a big recovery.
That was impressive recovery of the headline. And the sharp sell-off even if the charts go just around.
Continued improvement on job gains. U.S. economy at zero low bound on rates creates asymmetric risks. Asymmetric risks point to waiting longer to hike, says Elam. Some headwinds to the economy are receding. She's making an effort to balance basically everything she says. That can explain the stabilization in currency movements.
I don't believe we are going to see much more right now in the market.
No, I think we have some kind of stabilization, consolidation for now.
Yeah.
Yeah, maybe we can wrap there.
Yeah.
Okay. Yohay, do you want to?
Yeah, let's do some summary and
Okay.
projection forecast.
Yeah. Okay. So before the statement, we had a weakening of the U.S. dollar. This accelerated on the statement. The Fed did remove forward guidance regarding patience, but I counted 4 other things that were relatively dovish and accelerated the sell-off of the dollar. They said that confidence is needed on inflation. That they said that they're not going to hike in April. It's very explicit. They did say that the economy is moderated. They acknowledged the weak data that we see late. And perhaps most importantly, the dot chart shows that the median federal funds rate is expected to be 0.625, and that's much lower, 0.5% lower from 1.125 seen in December. All this hurt the US dollar. We did see it kind of make a small comeback on Yellen's words. Yellen did express confidence on the jobs market and said that wage growth is not a precondition for a rate hike. But in general, she tried to sort of stabilize. She didn't say anything really hawkish, but in comparison to the initial impact from the statement, it was sort of more bullish than the dovish statement, bearish statement. That's my summary. I think we'll have more action in the next when Tokyo opens and when Europe opens. Valeria?
I do agree with you. I do agree with you on that we are going to have more action later on the day, and that will probably mean a bit more of a dollar weakness. But as I said, I do believe that this dollar weakness is temporal, that the balance between central banks, which is in the background, will keep on favoring the greenback in term. And I do believe that we are going to see fresh lows in the euro, particularly sooner than we expect, even sooner than a rate hike in the US.
Yeah, I certainly agree. Yeah.
I do see the euro as the weakest currency overboard these days, and there's nothing that changed that picture right now. I don't know, maybe some weak data from the US, further weakening macroeconomic figures, right? But I don't see that coming so easily. So keep that in mind, guys, before you take a trade. Don't run before the move, right? But wait and think before doing the trade.
Yeah, we will have New Zealand GDP 3 hours, and then tomorrow we will have the Swiss National Bank interest rate decision.
Okay.
Also the minute, yeah, the Bank of Japan minute. That's all here. Okay.
Yeah.
Okay. It has been great, guys, to be with you. Thank you, Yohay,
Thank you.
for sharing this time, and thank you everyone that listened to us. See you back soon, okay?
Thank you very much, Valeria. Thank you very much, Yohay. Well, it has been a pleasure, and thank you everybody for being with us.
Okay. Bye-bye.
Thank you. Bye bye.
Bye bye. See you soon.
See you.